walk me through this here? I'm special.
Yeah, let me see it. So put one, you got the magnet?
Yeah.
Okay.
So it's
put
right here?
that just behind, yeah.
Oh, it just goes like this. So it doesn't have to put.
Yeah, perfect.
Oh, thank you. You want this?
Sure.
Okay. All right. So, like we said, we're with Iron Desert Insurance. My name is Justin Anderson, and this here is my business partner, Tyler Jensen. We're excited to be here. Fun topic with wildfire risk. It's a really taboo subject right now. Seems like half of Utah's on fire, and insurance has been tough, and it's been getting tougher. It seems like just 3-4 years ago, there were tons of companies that would take properties in Bryan Head, Duck Creek, all these mountain areas, no problem. But they just seem to be dropping like flies, unfortunately. So it's really important to know what you need to do, and you spoke to this a little bit, and how you can make your property look appealing to the insurance companies, so that you can get it insured and be able to move forward. So first we want to talk about, what do the carriers look at? What do they actually want to see? And you talked about that mapping, the new mapping that's come out. That has been interesting as well. It seems to have impacted the mountain areas, but also even Cedar City areas in St. George that you wouldn't think would be high wildfire risk. But all we can do is just prepare the properties and make them look as appealing as possible, I guess I'd say. So everything on the mountain is going to be mapped as a high risk area, and really anything that has a lot of brush close by. So you'll want to keep that in mind when looking for a cabin, or wanting to build, or buy one.
What can I expect to pay for a cabin insurance as opposed to my home here in St. George? Is it going to be astronomical? Is it going to be?
It depends. Yeah, it's a great question. So in the past, it honestly hasn't been too bad. It's been fairly comparable, I'd say. And even still, if you can get a standard carrier to take your cabin, and by standard carrier I mean a lot of the names that we all hear: Liberty Mutual, Nationwide, State Farm, Allstate, your rates really won't be terrible. I mean, your standard $500,000 cabin, fairly small, you're probably looking at somewhere in the ballpark of $1,000 to $2,000 a year if you can get with a standard carrier. Yeah. Did you say that's accurate? Is that an okay?
Yeah, that's
very comparable.
Mm-hmm. Yeah.
But how about today, now that we've had all these things happen?
Yeah. So if we can still get approved with standard carrier, it's still not bad. But a lot of these are now going to excess and surplus lines, or non-standard carriers. And those, you're probably looking at anywhere from $3,000 to $5,000 a year. Okay. And they depends on the cabin. I mean, that is definitely a ballpark estimate. But there's a lot of other considerations that go in with that. Some of them might not have the same coverage as a standard carrier would have. They have certain exclusions. They might have high wildfire deductibles that could be as high as like $25,000. But it's still doable. We can still get a policy in place, so we don't want people to be scared off. And a lot of the trends that we see happening, so in California is the most famous example. They have what they call the California Fair Plan. And if an insured can't find a policy in the normal market, they can't get a company to take it, there's a government company called the California Fair Plan. The government kind of just oversees everything, and they're a last resort carrier that will take it. They have to take it for wildfire. They're expensive, and people don't love them, but it gives them an option so that they can have the home. We're starting to see expansion. Utah still does not have that, but Colorado just recently adopted a similar plan, and a lot of these coastal states have them as well, like Texas, Florida. So I'm
just curious if the different practices in forest management between the states
Mhm.
affects whether or not insurance companies will insure your cabins?
I think so. Yeah. If there's an area that's being managed well, I think that's going to have a pretty big impact. It might take some time for the insurance companies to catch on that this forest is managed completely different than some of these others. But yeah, that is a very real risk. And we had an underwriter where we used to write a lot of our cabin properties, and he drove up the mountain when he came to visit Duck Creek, and it scared him off with all the dead trees and the bark beetle and all that stuff. And from that trip, he just said nothing in Duck Creek. We can still do Bryan Head and some other areas with those guys, but it is a real issue. Yeah.
So maybe other people have heard these horror stories with Hawaii and California, but can insurance carriers cancel you when they hear a fire going on 10 miles from your cabin?
Great question. So no, they cannot cancel you just because there's a fire or something going on. Now they can non-renew you if they feel like you're in too high of a wildfire risk area, but they can't cancel you just because of a fire. The other thing they can do is they put moratoriums in place, is what they call them, where they just pause all business, all changes. So as soon as there's a fire in that zip code or area, they will say you can no longer buy an insurance policy in this area until this fire's done. You can't change your coverages. You can't just double your coverage because the fire's coming. So that also can be a little bit of an issue. But
that's good. That's good that if you got something in place, it stays. And
Yeah.
it's honestly fair. It wouldn't be fair to the insurance companies if I'm like, oh, I'm in Bryan Head and it's coming up the mountain. I'm going to quadruple my coverage.
yeah.
What if you're in the middle of building and the construction line, is that covered with fire insurance?
That's a good question. So,
That's a great question.
one of the things that you'll want to get, and that will be required if you have financing of any kind, is a builder's risk policy. And it sounds like it's there to cover the builder, and it 100% is not. It's there to cover the asset as it currently sits, any materials and whatnot. So if you get to the framing stage of a project and a wildfire rips through there and burns everything down, the builder's risk policy will basically cover everything that has happened so far. So it's sort of like a bridge thing, and they can speak more to that. But
Yeah, that's exactly right. And if an insured needed to go get their own, there's also versions of that for like an owner builder or somebody else that, or a builder that doesn't want to provide builder's risk. You can get a normal homeowner's policy with a course of construction endorsement that does the same thing, a little trickier on those mountain properties. The builder's risk is probably the way to go. But yeah, it would be covered during that construction phase.
What kind of considerations would be made for someone who did do fire sprinklers and someone who didn't in
Yeah.
like an area like that? Or what are the big things that you could do to maybe incentivize them to insure you?
Yeah, great question. So they do have discounts. They're not as big as they probably should be for things like sprinklers. But the biggest thing is going to be kind of like you had touched on, roofing. They definitely don't want to see wood shakes or anything on your roof if you're on the mountain. They prefer steel roofing or metal roofing. Trees close to the home or touching the roof, things like that are going to be an automatic no, and they'll go out and inspect the home. Another big one, and you might be able to speak to this, the company that we have that still writes up there pretty well, they won't do open foundations. So if it's on piers or stilts or anything like that, they automatically will shut that down. Is that something that people still build regularly, or is it not?
Where we build, it's currently not allowed by the building department.
Hallelujah, great for
So,
insurance.
I mean, you can get away with doing like a little wing of the house, but
Yeah.
as a primary foundation, no. Although I will tell you, probably 60% of the cabins that are currently constructed up there are
Uh-huh.
on piers.
Yeah.
So you're saying all those cabins built in the past on piers, there are insurance carriers dropping them, or what's going on?
Most of them are not dropping them, but if you have insurance on something like that, never let it go, because
So
they're,
in other words, if I see a cabin up there that's 20 years old and I'm like, oh sweet, I love the deal, I'm gonna buy it.
yeah.
I may buy it and find that no insurance carrier will take it.
Yeah, you will be able to find something on it, but it's
Yeah.
going to be expensive, and the coverage won't be as good.
Okay.
Yeah.
So there's an incentive to build new with
Yeah, there you go. Just build over here, brand new
Yeah.
cabins. And the newer stuff is easier to insure as well.
Mhm.
Companies like new builds.
Have you seen siding ever affect your insurance prices? I get a lot of clients that ask me about siding specifically.
Yeah. Yeah. Log siding or like log homes can be a little bit more to insure. So if you use like a kit log home, that can be more. Seems like your normal frame stuff, if they choose to do stucco or even like the hardy board siding, seems the insurance companies like that a little bit more. I think just feels a little less like a cabin, maybe. It's a little scary for them. But they do prefer, most companies do prefer that it's not log. Yeah.
And, I have training 4 mornings a week with what I do with a living for financing.
Yeah.
And a couple of weeks ago, they were talking about the Palisade fire, and then one of our account reps from Fannie Mae is from Salt Lake, and she lives in Texas.
Yeah.
And her family used to own a cabin in Pine Valley.
Mm-hmm.
And so, and being familiar with everything, it was a great topic of interest, because the 17 cabins that burned down in Pine Valley, all 17 are either in the process or are done
Right.
that fast. But the Palisades, I think they said statistically, is it 2% of the houses have been rebuilt so far?
Wow.
And that boils down, they keep blaming it on insurance.
Yeah.
So what's the difference? I can't lend in California, I can in Utah and Idaho, but I don't know what the difference is. Why there is there a problem, and why here? Is it just because Utah's good, or what's the scenario?
Utah's definitely
Yes,
good.
that's
Yeah.
right.
I mean, insurance companies love Utah for some reason. I mean, we seem to, until recently with these wildfires, we're just a very good, profitable state for insurance companies. I can't speak to why they're struggling so much in the Palisades, but I think it could have to do with just the companies over there
It's
and
just expensive.
yeah,
And
It's
the
probably-
houses that burn down in the Palisades,
yeah,
they start at $5 million. So you go
Yeah.
to $20-25 million homes that they want to be, and insurance companies like, all
Hold
my
on.
family's in California, State Farm will not do
Oh, yeah.
one policy at all,
Yeah.
no matter what you are, and they're charging up to $8,000 to $10,000 a month on some of these houses in Pasadena and stuff like that because of the fires, and
yeah.
they just said, we're dropping you, we're not gonna get new policies, we're out of California, and it's just,
Sad. It's sad. Yeah. So.
I have a brother-in-law that just lost both of his cabins at Elk Meadows.
Oh no! I'm
He
sorry to hear that.
He was building a smaller cabin and a big cabin. He lost both cabins, a fifth wheel trailer, a side by side, and 2 4-wheelers. And he did not have the cabins insured
Oh no!
by his own choice,
Oh,
because he was the builder and he was building it for himself, and he just building it as he went. He did not have insurance on anything.
Brutal.
that's devastating.
Do you require people to have insurance if they're getting a loan, or
What's that?
do you require people to have fire insurance if they're building a cabin?
If you have
they're getting
if you have a loan on it, but if you're building it out of pocket, there's no one to police that.
Yeah.
And that was
It's
the
brutal.
first thing that Fannie Mae said to me when I came. AJ asked me to be ready for this. The only concern Fannie Mae has is making sure we take into consideration on mountain property what the insurance is going to be
Mhm.
for the debt to income ratio. That was Fannie
Yeah.
Mae's only concern. Utah and Idaho, no problem.
No problem.
Yeah. Wow. Yeah, we'll move on. But the last things I want to talk about, just that carriers look at, is definitely emergency access, how far you are from a fire department. Usually you want to be within 10. In the Duck Creek and Bryan Head areas, you're usually within that. And then property maintenance, obviously, and just maintenance of roads as well, getting into the cabin. So, you want this?
I'll just take it off of here. Yeah, Peter, you already kind of touched on this, but just touching on the wildfire preparedness and how to set up your property for success, especially in those wildfire-prone areas. And we've kind of adjusted the footage a little bit from the mapping just based on what we've seen with carriers in the past and what they prefer. So 0 to 10 feet, like you said, we don't want pine needles, dry leaves, anything like that around the perimeter. A lot of people like to stack their firewood alongside the cabin so that it's easy to grab. Insurance carriers hate that because it's literally fuel to the fire, right? So we want to avoid that. If you've got gutters, keep them clean and remove any dead vegetation. That's 0 to 10 feet. Like I said, we kind of increase it a little bit based on what the carriers prefer. 10 to 50 feet, we want to see trees limbed up 6 to 10 feet based on the size of the tree. And, we're trying to spread out the fuel, I guess you could say. So trees and shrubs, we want to break those apart as much as possible. And I'll kind of get into that on the 50 to 100 feet as well. And obviously remove dead trees and shrubs. Those light up fast and they will cause some damage. So, and obviously keep grasses and weeds down, mow them down. Don't let them get too crazy, because that leads us into the 50 to 100 feet. We're thinning dense vegetation. Right now we're a little bit further away from the cabin, but we still want to keep things manicured. And removing ladder fuels. Does anyone know what ladder fuels are? Anyone familiar with that term?
I think it's branches. At least in my reading, it's mostly like branches can climb up to the tree, top of the tree and stuff like that.
Yeah, so it's basically the fire's ability to elevate, right? So it starts in the grasses, goes to high grasses, then your shorter trees, saplings, shrubs, and then those can lead into the taller trees and the bigger trees that are really going to throw those embers out, right? So eliminating those chances. If you've got smaller trees underneath larger trees that could cause that ladder effect, we want to get rid of those and we want to clear those up so we can prevent that elevation gain from the fire, because those falling debris are what's going to help that fire spread a lot faster. And then we're trying to create fuel breaks as well. Like we said, removing shrubs and trees that are too close together. The further apart we can get them, the harder it is for that fire to spread. So, yeah, this doesn't just help it be safer if a wildfire were to occur. Insurance companies look at this and they will do inspections and check in on it. And it could, be the make or break whether you qualify for insurance or not. So keeping a well-manicured property in those wildfire zones is incredibly important to be insurable and keep your coverage for the long term.
Awesome. Okay, and then just moving on, we kind of already hit on a lot of these, but common insurance red flags. Brush is going to be number one. If you've got brush close to or touching the cabin, it's going to be tough to get an underwriter to inspect it and say yes. Overhanging trees is another big one that we see where they want people to chop those down, trim limbs. Unrepaired damage to roofing and siding is huge. Wood stoves is a really big thing in cabins. We want to make sure that those are getting looked at professionally every so often to make sure they're maintained and cleaned, those can be a source of fires pretty commonly. And then, just making sure that it's maintained properly. One other thing I did want to just hit on is with the excess and surplus policies, if we can't get it with a standard carrier, one thing that you might want to know for your clients is it's going to take a lot more time. So we don't want to bring it down to the finish line where we have like 3 days before closing and we're trying to get a policy in place, because with standard carriers we usually can get that done same day most of the time even. But with these excess and surplus carriers, we usually have to go to a brokerage, and they're usually a week minimum to get quotes back. So just one other thing to keep in mind is to manage expectations. Start shopping for insurance early if you're buying a mountain property or a cabin, so that you can make sure that you're good to go and comfortable with the costs, and you don't have any surprises at the end there. So.
And Jeff, correct me, but if we don't have a policy in place, we're not closing per Fannie Mae.
That is correct. You can't get it cleared to close if you don't have the insurance policy already in place. And I did call, can I just add to this real quick?
Please, yeah.
When I talked to Fannie Mae today, because of the ability to work remotely now since COVID hit, they can do up to, even on a cabin property, recreational property, etc., they can do loans now with only 5% down still, as long as the total loan is under $832,000. So like on the houses you're building where you talked about the $500,000 or $600,000, if someone's got 5% and they say I'm going to work remotely, which a lot of people do. My processor works for me and she lives in Idaho. You know, everybody knows someone that works remotely. So as little as 5% down, you can get a cabin.
That's awesome.
Yeah, we're business owners, so. Well, do you guys have any quick questions for them? Otherwise, I'd like to bring Jeff up, and he can speak a little more in depth on construction financing. Any questions on insurance? Yeah.
Yeah, so on a new build, are you guys working hand in hand as you're setting these perimeters, as you're starting to build? Or like, do you guys come in at 3 months, 6 months, or on the bill? Is there a certain time that you guys do on new builds?
Yeah. I would say the sooner the better, just so we know, because we can get quotes in place. I mean, I'd say when there's only a couple months left before we're thinking it's going to be wrapped up, we probably want to start thinking about the insurance and make sure that we've got the best policy in place possible well before closing.
And from a lender's point of view, we'd want to know it as soon as possible so we know what the cost is going back to the debt to income ratio to make sure you're fully qualified. Okay.
Yeah.
Awesome. Any other questions?
Differences between Nevada and Utah?
Yeah, great question. So Nevada, for the most part, seems to be okay on property insurance. They have more issues with auto insurance, but mostly same things are going to apply to a Nevada home as well for insurance. Pretty similar. Yeah.
Great.
Cool.
Thank you guys.
Thank you.
Can we grab those mics from you?
Yep.
Absolutely.
So everybody, this is Jeff Worthington. He's the owner of Crestmore 2.
Well, thank you.
And if he is B, he's the first one to tell the client to go take that great deal. So anyways, my family and I, we love Jeff a lot, and he's been a great friend to us. He's going to talk about some of the really cool construction programs, including a new 5% down construction. So you can build, you can walk in before you've even bought the lot. 5% of the total build cost and land cost is all you need to get started.
Okay, and that's usually the very, other than the style of cabin, the location of the cabin, the next thing that comes into mind is the dollar signs. Okay, and then that monthly payment. So we're seeing a lot more people asking about the 5% down program. And the 5% down program is relatively new. It hasn't been out just a year or two, but everything takes a while for the wheels to get going. So 5% down, you can pay for the lot, the cost to build, and you're off and running as long as it's a primary residence. So, and that's when you go back to working remotely. If you're working remotely and you can consider it a primary residence, and you fill out the paperwork that Fannie Mae accepts, then the 5% down, you're off and running. So on an $800,000 house, they could get into it for $40,000 as long as they can make the payment on the $760,000 loan. And please note there will be closing costs associated with it. The biggest one is always title insurance, you know, between that and the appraisal and if you have an escrow account. But the 5% is brand new. It's very, very positive. When I talked to our rep from Fannie Mae, most people are still doing 10 to 20% down. And the reason they're doing the 20% down, everyone's probably aware of this, so they're avoiding the PMI. So they don't have that on their monthly payment. So the average 10 to 20%, but 5%. So if I walked up to you and said, hey, like what Carlos said a minute ago, I'd like a 2-bedroom, 2-bath, 1,500, 1,800 square foot cabin, and the cost was $500,000, $25,000, you're into a house, you know, and that's a great way to go. Just the normal qualifications, 50% debt to income ratio. They're looking for, you know, the things that control it are your FICO scores, your debt to income ratio, your job history, just the normal same stuff.
Does that, so some of the things that we run into, because obviously cabins are second homes usually, does that have any bearing on how that whole process goes?
The only thing is on a second home, kind of like an investment property, the interest rate is slightly higher than the primary residence.
Like, can you still do this 5%?
On a second home, no.
No.
No, has to be a primary residence.
Can you count some of the income if you're gonna short-term rent it as income for the loan?
What did you say?
Can you count the rent if you're gonna short-term rent it for like income towards the loan?
I did not ask on that, but I'll just use the guideline they have is used for a normal Fannie Mae loan. If you've got a history of already renting and you've got like on your 1040s on your Schedule E, you've got rental income, there's usually a way to figure that out. But if it's brand new and you haven't rented before, I'll bet they're going to want to see a year or two worth of tax returns showing that income.
So maybe some homework for you, Jeff, is to see if there's any program that would allow us to either use projections or market area rents on a cabin just like it in Bryan Head to help us get our financing possibly.
So forecasting.
Yeah.
Yeah.
Because I know there's like a DSCR loan kind of does that.
Yes.
Is that one that we could use in a construction scenario, or there's no way?
Well, the DSCR loan is a minimum of 20% down.
Right.
I'll find out.
So that'd be fun to know.
I'll find out.
And I think Mary Ann and I want to know, we're real estate professionals. Can we work remotely according to Fannie Mae and Freddie Mac and buy our cabins with 5% down?
I'll find out. Just so if this is being videoed, I want to make sure I'm saying the right thing. My personal opinion, yeah, we can figure out a way, but we have to fit in.
We would never want to do anything wrong in
No.
Fannie Mae's eyes. So.
Yep. Are you guys familiar with the quarterly, the state issues? What's the word I'm looking? They just issued it every quarter that tells you what's going on in the real estate world in the state of Utah, and some of the things that you can get in trouble for can be that small,
right?
And they get blown out of proportion. So yeah, I'd like to make sure I know.
We want to do everything on the up and up, of course.
Yeah, yep. But I'll find out, and you have everyone's information, right? So if I get the answer tomorrow morning, when I get back to my office tonight, I'll email our rep, and she's great to respond. We'll get that for you.
Cool. All right. So if people are wanting to build a cabin, they could do 5% down, but they have to claim that as a primary residence, correct?
That is correct.
They could come in with 20% down, and there's a lot more options that way, correct?
Or a minimum of 10% down.
Minimum of 10%.
But they will
down.
have PMI.
Okay.
Yep.
So for 5 and 10% down, you can get a cabin in almost any scenario, provided you qualify for the monthly payment. And then what we want to know is, can we use this income that we are now going to receive as Airbnb owners to help us qualify?
Is there a formula? So you're a real estate agent. Okay. Is there a formula you and AJ use? Like if someone says, I'm buying a property for $500,000 and I should be able to Airbnb it 100 days a year at so much. Is there a formula that you use when you're selling a property?
Well, so there's a company called AirDNA, and they compile data. Now I'm told that while this data is maybe the best out there, that mortgage companies still don't rely on it. They want, really all you can do, I think, is grab your neighbor's data and share it, and they might count that, and they might not too.
Okay, All right, I'll find out. I'll know
So-
by tomorrow morning
Great.
at the latest, okay?
How long can you hold a construction loan?
How long? The normal one we see from our side is 9 to 12 months. What do you see?
So, some of the lenders that we've worked with more recently have started, especially in Bryant Head, have allowed it to go for 2 years.
Oh.
Just
So you don't have to start paying until it's finished, right?
well, typically you have to pay at least the interest payments during the course of the loan. And it'll be based off of, and I'm not the financial guy, but my experience is it'll be based off of how much you've spent of that loan to that point. So.
And that meets the 5% down. They want the minimum of what you've drawn so far at the 5% down program. You are correct.
And Jeff, can you real quickly tell us about one-time closed construction loans and traditional two-time?
Yeah, the one time, like this 5% down, one time your interest, so let's pretend the going interest rate is 6%. You're locked in at 6% right then. It carries on once the home is built. And if the rates have dropped, a lot of the banks will give you an option to roll the rate down to the current rate. And a one-time close, and I've done several two-time closes that have been more beneficial than I thought the one-time might be, only because the only thing is you're paying title insurance twice. That's the biggest one that I've noticed.
Yeah.
If a lender's really aggressive and really careful, the client's not losing anything at all, but the gain might be bigger if the interest rates have gone down.
And then the one-time construction loan, the advantages there are, I pick the lot, I put my 5% on the total thing, and now I just pay interest-only payments, and I don't need to come up with any more down payment.
That is correct.
When it's finished. And I know that if interest rates go south, I've already locked it in.
Right.
And my builder loves this because he knows the whole job is secured, and he doesn't have to get an appraisal at the end and then fight the appraiser to say that what you paid for is what the cabin's actually worth.
Yeah, you'll still have to get an appraisal at the end, but it really doesn't affect whether.
They don't have a choice not to because they've already promised the money. Yeah.
Exactly, and that is when appraisals are a pain in the neck up in.
Because you and I are working on one where you built the cabin, you agreed on this price, you performed the job, and the construction loan has started and now is trying to end, and then the appraiser's saying, well, first of all, the appraiser doesn't seem very well versed in the area because he can't find the comps, but he's saying that it's not worth the amount that you guys agreed on.
Yeah.
And the amount that it literally costs to build it.
Yeah.
So.
I've read several thousand appraisals, and actually I have a family member that is an appraiser, and so I get to see it on a daily basis. And whether you're a builder or a lender or an agent or insurance or whatever field you're in, sometimes things are just tough. You know, an appraisal, from what I witnessed, is a professional opinion because there's so many variables, but you're only allowed to have the comps be so far away. There's so many factors, and it's just like when you're building a house or you're trying to make a sale, or there's a lot of variables.
Yeah.
Yep, but I like the 5% down because it keeps cash in the client's pocket, you know, and just makes things a little bit easier.
Okay, well, Marianne and I want to buy our 5% down cabins, so let's get going.
Okay.
Do you guys have any questions for Jeff? Sorry.
I just wanna pick out a lot, but maybe not start building it yet. Is that possible?
Of course.
Yeah. So yeah, you just use a lot loan, and then we can sit on it and wait till you're ready. And you could do. How much can she buy a lot for 5% down as well?
Yeah. The only problem is
10%.
it's supposed to be, you can buy, if you're buying the lot early, they want the lot and the construction to begin at one time. So
For the one-time
Saying how
close.
long, 'cause you said
For a-
2 years.
for a
Yeah,
one-time close.
If you're gonna get a construction loan, but if you obviously.
Sorry, Marianne, you have to start now.
Yeah.
Well, I have a construction loan.
Let's make a deal. Let's go.
But if you were to buy the lot now, I have seen some of I don't have lot loans that I can do, but I've seen some of the credit unions or local banks that have the lot loans for like 25% down. Some have a special, sometimes 20% down.
The other thing I'll say that is probably not good to say, but I'm gonna say it anyway. is in
Cover up the
mountains,
mics, just
moving
kidding.
property is more difficult often, and so there's a lot more opportunities for seller financing on mountain properties than there typically would be in an urban
In a city,
environment.
yeah.
So that's something that I would recommend if you're looking to just get the lot. You can often, obviously you still wanna get like a title company involved and whatnot, but there's a lot more seller financing opportunities on mountain properties from what I've seen.
And then we would encourage you to get Peter involved so that you can pick a lot that's going to be easy to build on. Not in 5 years we find out that the power is 1,500 feet away or something.
Yeah.
So
Well, and to add on to that, not to take all of Jeff's time as well, but we like getting involved in the design process pretty early on. We have a project right now that AJ went to this last weekend that I've been working with them for 5 years, and 4 of those years were doing the plans and changing things and altering this and that. So we like to get involved the second you get a lot, even if we're not gonna build it for a while, just so that everybody's on the same page and we have time to tweak everything, cause
How long does it take to finish like a 2,000 square foot cabin?
our build time up there is gonna vary significantly depending on when during the year we start, because weather can impact things pretty in a big way. So
He needs it by Christmas.
Well, that's what I mean, is like, you wanna pick out a lot now,
Yeah.
but not want the frame to be snowed on,
Yeah, so
start it
we're
after.
we're gonna recommend you start as early in the year as you can. We work all the way through the year. Regardless, we typically try to get concrete in before Thanksgiving. That gives it time to cure appropriately, typically before there's too much snow and cold weather. But our turnaround time generally is gonna be anywhere between 9 months to a year and a half. It varies a lot with the lot that we have, the access that we have, the type of weather that we end up getting, and when during the year we start. But that's the range that typically I'll give people.
So we have about 10 minutes left. I want to bring Peter back up here.
Okay.
He has prepared a number of homes that he's already spec'd out and priced out that are very affordable. If you could hand him that mic as well. So we wanted to talk about these for a minute.
So then I need to talk to you, Jeff.
And then we're going to end at 7:30, but all of us are going to stick around for about 30 minutes. So if you have questions about your personal situation, we'd love to talk about those. But anyway, yeah, go ahead. I think I'm going to start here at your most affordable, which is, let's see.
Not that one.
425, the Pine.
Yep.
Well, that's nice.
Yeah.
Okay, so tell us about this. Yeah.
This is a single level, 3-bedroom, 2-bath property. It's really, if you just kind of want a place to go, but you're going to spend a lot more time out on the deck. The majority of the living area is kind of geared towards being outside. But this will fit plenty of people. You could turn a couple of those into bunk rooms and, fit 6 or 7 people in here. We've integrated the dining table into the island that's there to allow for a little bit more compact space. It's a little more intimate plan, but is going to be much more affordable than most of the higher end kind of custom plans. It's a really simple plan. It's going to insure pretty well, and it's going to shed snow really easily, not onto the spaces that you're trying to spend time. And so we really like this plan. It's a great plan. We just finished one of these about 6 months ago up in Duck Creek, and yeah, we like it a lot.
Yeah, and so Peter and we looked at a ton of lots last time we were up on the mountain a few weeks ago, and I would say it's pretty doable to find a lot for $100,000. So you could realistically have a brand new cabin for $525. Pretty cool.
I would just insert in there, there's going to be a little bit of a cost for your site work and whatnot. Just every single site on the mountain is completely different. we have had situations where I've dug a hole on one side of the lot and hit rock, dug a hole on the other side of the lot, and it was like really cruddy soil that we couldn't build on. So you do see a lot of fluctuation in that. So keep that.
And I
in
know
mind.
that I and Peter are super happy to go lot shopping with you and help you figure out
Yeah.
if it's a good lot. And he can, before you've even bought it, especially if we take some due diligence time, we can bring him out and he can dig a test pit if we need to and figure out, okay, is this one that you really want to get involved in?
Yeah.
Tell us about this plan, the hollow starting at 585.
Yeah, so this plan is a two-story plan. This is funny. This one was built across the street from the Pine. And this is where you want a little bit more garage space. There's an office upstairs in this one that could be eliminated to allow for a little bit larger main floor and great room area. It's got a nice owner's suite on it as well. And the garage, I mean, it's a 3-car garage in this exact plan, but very easily could convert that into a couple more bedrooms or another gathering space downstairs. This one also has a really nice large deck that wraps around 2 sides. The unique thing about this one is that all of the kind of main areas are going to be upstairs. This would work well as either a walkout basement style or daylight basement style or standalone. The way we built this one is a standalone one, so there's not a lot of craziness to that one, but it is a good option. It's nice and efficient, big deck, nice for views and whatnot. So
Great, beautiful. Now the view.
So this one's a little bit more of a modern style. It does have a great room both upstairs and downstairs. It's got a nice owner's suite, good little entryway, a very small garage. It's more of a storage unit than a garage, but it is nice to have some place to put, ATVs and 4-wheelers and snowmobiles and whatnot. So we wanted to include that in this one. This one, we like building this shed roof style because it's much more conducive to a metal roof. It allows the snow to shed really easily, but also if you have a lot that's got a primary view that you're trying to capture in one direction, this type of a plan is really, really good for that because you have this really nice big tall wall of windows. I like windows a lot. There's a lot of good views up in the mountains, and so this is one that I actually personally designed for a family that wanted to have some entertaining space, but it's also got, a bunk room and 2 other bedrooms. And there is a version of this plan, which I didn't put on there, that does have a 4th bedroom as well downstairs. So it's a great plan.
Is that 3-bedroom?
This is a 3-bedroom.
4-bedroom.
Is that one? Well, there's a 4-bedroom version and a 3-bedroom version.
Okay.
And then you've got, I believe it's 2.5 bath. Is what that one is.
AJ, when you said earlier 100,000, you were talking about Duck Creek.
I know lots in Bryan Head for about 100,000. Obviously, if you're trying to get into the new development, you're going to pay more than that.
Mm-hmm.
But there's stuff right near the resort for about 100,000. And
Yeah.
Duck Creek, you can get under 100,000.
Yeah, you
in some
can definitely
cases.
get under 100,000 in Duck Creek.
Okay, so there's the view. Now we're gonna get into some more of the intricate ones. And I was on the mountain last weekend, and I think I saw one that's gonna be about $3 million. Is that right?
Yep.
And then what about the other one? What's
The
that
other
one
one's
coming
going to
in at?
be between 2 and 2.5 by the time it's all said and done.
So these guys, Jacob Construction, are extremely skilled, and they can build some of the best stuff you'll find anywhere in the country as far as cabins go. But here's one called the Mountain that is going to be about a $1.1 million project.
Yeah, so this is a chalet style cabin, but it's the reason I call this one the Mountain is it's 3 stories. So you're going to be hiking a lot. But one of the locations that we've built this plan, and we've built this one a couple of different times, but one of the locations that we built this plan, you've got a view clear from Duck Creek, basically all the way down onto the coral pink sand dunes, and so it's a really cool spot. The great room in this house is absolutely massive with a really tall vaulted ceiling, great fireplace, and a good entertaining area. The plan flows really well. I believe that this one is a 4-bedroom and 3.5 bathrooms. The master suite is up on the top floor, and so, but it's also very large. So you walk out of the master suite and you see this wall of windows, and it's a pretty cool experience. So it's got a loft in it as well, which is always nice when you're trying to entertain people or have a bunch of family over as well.
So quick side road. I have a premium membership to AirDNA, so I can pull that data. I just threw in Brian Head. We're looking about $35,000 to $40,000 in average revenue. So we could look at some of their smaller properties, and we can figure out a way to get a lot of your mortgage covered by you allowing it to be an Airbnb. And then obviously something like this will be on the higher end if you decide to Airbnb that as well. And then you have one more spec home, and we do also want to mention too that they do a ton of custom stuff. If you have a plan, there's a like houseplans.net or something. If you've got something in mind, bring it to them. They'll work on it. They may need an architect to draw it up professionally, but the sky's the limit. Is that fair to say?
Oh yeah, absolutely. This one's also one that I worked pretty heavily on the design of, and we did design this for a specific client, but it's such a universal design that we've kind of kept it in the back pocket. When we originally built this house, again, this lot that this is on has like one of the most incredible views of red cliffs in the back, and so it's got 10-foot tall bifold doors that go across a 16-foot wide opening, and it's incredible once you walk through. You can actually, there's a porte-cochere on the front of this house. You can stand in the porte-cochere and look through the entire great room at
What does that
view.
mean?
So porte-cochere is like at a hotel or something where you drive underneath a covered area in the front of the house. We like to put them up there just because it's a little bit nicer for loading and unloading and getting into the house with guests and things like that. And so we try to take all that stuff into consideration. Do you have a question?
Yeah, what do you think? What do you guys think is kind of the ideal Airbnb space? Like, some of that's going to be the view and the number of people, but what on average is renting the most, square footage wise, bedroom wise?
So we've had a couple of different clients specifically build houses for Airbnbs and long-term rentals. I'm going to give two answers to that question. It sort of depends on what you're looking to attract. So if you want to have a really nice high-end rental that's got a lot of bedrooms and everything, Utah's a great place for that because you have tons of family reunions with large families just because of the culture that we have here. If you're looking for something like in a ski community that's for like a couples trip kind of a thing, that's going to be a whole different thing. So a little bit of it is kind of purpose driven in what you're trying to accomplish for yourself and as far as the rental goes. When you're doing the larger family target, you're going to get a lot more money per rental, but you're going to have a lot fewer rentals. Whereas with the smaller ones, you're going to be full more. And so if you're looking at kind of the ideal range, I would say honestly the 1 to 2 bedrooms is going to be really good for kind of the couples trip, keeping it constantly full. You get a lot more of those type of people coming to see the national parks and whatnot around here. But if you're going to go up above that, you're going to want to have at least probably 4 to 5 bedrooms and a bunk room, and then some additional space for people to sprawl out and use, the floor to sleep and whatnot. So yeah, I think there's two sides to that.
And in my mind as well, I mean, Brian Head, I love that because it's got 4 seasons attraction. People love to go there in the fall and spring. People love to go there in the summer, and then people ski. And so I know that there's always going to be demand there. Whereas Duck Creek, I mean, there's a lot of properties there that are not even accessible unless you got a snowmobile.
Yeah. It always boils down to what you're looking for.
So I guess also to answer that, come meet with us. I have a huge database of data for Airbnb rentals, and we can go and figure out, okay, I want to spend $700,000. I want this much of a return. Okay, where are we going to do that? How is that possible? We'll put all that together for you, and because that's at the end of the day, that's my favorite part of my job. Is I don't just want to be a realtor that's there to make my commission and laugh all the way to the bank. I want to provide value, and I want you guys to be like, wow, AJ helped me find the opportunity that's making me money and making me and my family, have lasting wealth over the generations. So.
Yep. I agree. I
Okay.
concur.
So we're at 7:30. We would just open the floor to questions. If you guys need to run, totally understand. But I know Jeff, myself, Iron Desert guys, Peter, we're all willing to stay and talk about individual situations that are on a personal basis. And also, we'd love to meet you on the mountain and talk about if this is feasible for you. And I know Peter and we're going to have some serious conversations because I just sold a rental up north and I've got some 1031 money. And initially, when Peter and I were first talking, I was like, I think that this price point is too high for me, but I really like that $400,000 plan.
Mm-hmm.
So we're going to have some serious conversations, see if we can figure it out. So
I'm excited.
You got one on the ski and ski out lot?
Yeah, some of the newer areas, it's going to depend on the HOA. For ski and ski out stuff, we're going to want to get the HOA involved really early on before we design too much. They do have a lot of opinions because they see themselves as higher end properties. A lot of times they have minimum footprint sizes and square footages that they'll allow you to build. So that's one of the reasons why I get a little leery of building small stuff in Bryan Head, just because they really think they're Park City already, and
they're not yet.
They're not. That's the whole main issue. The first day I went to Bryan Head, I go, I'm buying here, and
Yep.
then every place I look, $279,
Yep.
2-bedroom, but the HOA is $485 a month.
Mhm.
So I got to rent it out for a whole weekend just to cover one
Yes.
HOA. So when it comes to your kind of build, we still have to fit in some kind of HOA.
Yes, there's a few areas that aren't actually incorporated into Bryan Head. My in-laws actually have a cabin up there, but you still have to haul water. But there's some areas there that are right on the edge where you can get access to water and electricity that aren't actually incorporated into Bryan Head town, and so they're not part of any HOAs. You're in Bryan Head or in Iron County technically, and so
It would take you how long to get to?
Yeah.
it's not as far as you would think. I mean, the turnoff where my in-laws' property is, if you know much about Bryan Head, there's a store called Apple Annie's right as you go in, and there's a turnoff right before you get up into Apple Annie's off to the right there, and there's a Manzanita Trail is that area right there.
Mm-hmm.
And if you drive back up in there, there's properties that are not incorporated into Bryan Head town, but still have access to a lot of the utility offerings that they have.
And I would point out too, Carlos, the main HOA problem in Bryan Head are condominium buildings, because they've just been they're 30 or 40 years old. Things are breaking down. The HOAs have to go up to maintain the building. When we're building a single family cabin on a lot, there may be a tiny HOA for like snow plow or something, but the HOA is not going to be a big part of your life if we can find the right lot, even in parts of Bryan Head.
Yeah, the one thing you do have to be careful of before you pull the trigger on a lot is you want to do your research in Bryan Head for sure. So I'll just tell you one of my horror stories, and I'm supposed to be positive and convincing you guys to build stuff, but I like being real. And so we had a property on Forest Drive over there that we were legitimately 2 days away from pulling the trigger on building and breaking ground on that property, and it ended up getting shut down because right at the 11th hour, their public works director informed us that in order to get our building permit signed off, they were going to require us to improve the road up to where her property was, which meant putting all like a 8-inch main water line that was going to eventually feed the rest of the street. We were going to have to widen the road and get it all prepped for asphalt, and it was going to be like everything that, and we were going to have to run, you know, the community-sized gas lines and everything like that, and that was going to add $220,000 to her price tag.
Jeez.
Right 2 days before we were supposed to break ground. So it's really important in Bryan Head to know what you're looking at, and it's important to make as many calls as are necessary. Your real estate agents will help you with 99% of that, but like, just be aware the mountain is a whole different animal, and it's worth building up there. I can't emphasize that enough, but you really want to make sure you're working with people who know what they're doing, and even still you can have things go wrong. So I can't emphasize that part enough.
Okay. Well, guys, thank you so much for your time today. We'll go ahead and break the class, but we'll stick around if you guys want to talk to us individually. Thank you for your time, and we'd love to talk more about building on the mountain. So,
Perfect.
thank you.